The week is starting off red in the markets, except for a few of our favorite stocks. We'll be discussing that, everything else to expect this week, including a ton of Fed officials speaking, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. Hope you had a great weekend. If you would do us a favor, hit that like button, subscribe to our channel. Please remember, nothing that we say is financial advice, Kevin or I. So do your own research before making any buys or sells. Kev, it's a little early today. We're going to keep this one short and sweet. I'm getting ready to head out for vacation, spending some time out on my snowboard. Cannot wait. But we had to touch base a little bit on what is going on with the markets and what we're expecting to see play out this week.
Yeah, absolutely. I think it's already been a really interesting start to the week, starting in Asia last night. We're seeing some red today. Kind of a, intermediate earnings week too. We're going to be taking a look at that. But I think there's a lot of stuff that's important to keep an eye on, even if the charts don't necessarily align with there it is. There it is. 100% Chris. If the charts don't necessarily align with kind of the reality of where we're sitting in the global economy. So
to answer your question, Chris, when I go on vacation, the markets tend to dump. So Just get prepared. Get your shorts ready, okay?
Yeah. So, I mean, if you want to start in Asia, I think that might be a good place because last night was absolute bloodbath. I'm going to pull up just, again, most of us probably can't read Mandarin, but I do want to pull up this image of how the markets look last night in Asia. So we could see that a lot of these indexes were down significantly. I believe it was 27 to 30% of all indexes and stocks were limit down to start the trading morning in China. And you can see that it's severely red, right? We got 3.5%, 4.17%, 5%, almost 4%, 5% across the board. Even if I move this banner, you can see this one down here in the corner, the bottom right corner. That's the CSI, I believe, or what is that? I think that's the CSI 1000. It's an index very similar to the Russell 2000 over in China, but down 8%. I think it closed around 6.5% or so, but very bloody morning in China. They had a halt trading, which is the first one I think we've gotten this year. Where they have to say, you know what, this is too crazy. Let's calm down. I wish they would do the same thing when Nvidia is going up like $27 every fucking day. But you always see them always like, oh no, we can't let this go down any further. It's like every fucking economy does that, and they're just like, we don't want it to spook investors. It's like, okay, I understand why you guys do that, but you don't do it in the opposite unless it's GameStop and you don't want the fuckers to buy it. So I think it's just bullshit. Again, rigged game. But if we go further into this, we could see that this is from some of the restrictions that came out of last night. China is tightening trading options. They're making it even harder for people onshore and offshore to short stocks in China. They're trying to limit, prevent this as much as they possibly can. Everything that they've done so far, from injecting liquidity to short selling bans, has not worked. And this is the worst part about it, is because we know that the Chinese Lunar New Year, it might be this week that it's happening. This is one of the biggest times in the in the country. It's the biggest holiday, and we're starting to see demand even within the country still begin to shift, right? And it's starting to be really bad. Demand just not picking up one bit. Nothing's really working right now, and it's really scary because, well, if it's not working there, the world's second largest economy, and they're injecting liquidity, well, that money has to come from somewhere. That's usually U.S. Treasuries, right? So that might be a really interesting week ahead when we have some of these U.S. Treasury auctions that are coming up. I'm really interested to see how that plays out. But the other thing, too, I want to bring up with China and what's going on over there is on the 60-minute interview last night with Jerome Powell, they did do a section on the U.S. border. And they were talking about how the majority of people, at this one point coming in are 100% Chinese. And they're either coming through parts of South America or they're coming in through Mexico with a visa. And then they're just walking through the desert through this hole in the border wall. But the reason I bring this up is the reason they're saying that they're leaving is because that there's less opportunities over in China right now, and that the economy and obviously other reasons, political reasons, are constricting them from, living a lifestyle that's, feasible. They're not able, the economy's so bad over there that they're fleeing, and it's people and it's families. So now that we're seeing some of that, it's like, okay, things in China might actually be worse than we actually anticipate, right? Because I mean, the US is not a close trip by any means from China, right? It's very far away. So I mean, there's definitely some some rationale behind that if they're making that long journey. But China, for the most part, is not in a great place. I'm going to look up one more chart in China. Well, we look at two, because the Hang Seng, they bought that back and they tried to bid it up as much as they could. I don't think that thing's going to hold up forever. And again, maybe I'm wrong. Maybe the Hang Seng holds this historical level of support. But last night it opened up down here, and then they had to buy it back. It opened up down around 15,337, and it finally closed around 1505, and it actually went up all the way to 15,668. So it was down 23 points, 1.53. Nothing. It's not nothing really. But if we look at some of the other ones, this is the Shanghai Composite. That was down 27 points. At one point, it was down way lower. And when I look at this on the Shanghai, the SSE, take a look at this. This is a historical pattern. It's a wedge pattern, and it's lost this historical level of support, which is the bottom trend line, and it's down big from it. If I go to the weekly on this thing, you can probably see it even better. Yeah. So we broke out of this. Our levels of support are obviously where we currently are. If that holds, if not, we got a little bit down here around 24. So that would be about 300 or 250 to 300 point drop from where we currently are. And then if that doesn't hold, we're probably going somewhere around June 2013 to December 2008, like 2008 lows. So roughly from here to there, that's 9%. From here to there, it's 27%. And here to there, it's about 40%. And the interesting thing about this and some of these other ones is that to start the year, some of these indexes are down 30%. This one right here, the that's the Hang Seng. I need the CSI. Where is it? Yeah, the CSI 1000. This thing is down insane amounts to start the year. It's down 18% in January. It's down 10% here in February already. Man, it's only been a few trading days. But yeah, 26.59%. Obviously, it bid up right at the end of the day. But we are not in a good place for China. And the thing is, we keep saying, oh, no, it's just China's problem. If we are in an interconnected debt market in the entire in global economy, and China is the world's second largest economy, they export whatever they have problem wise, exports to the rest of the world. I don't care what anyone says. And that's why people are saying that, oh, maybe the United States falls later, but for the most part, China's pretty much done. Maybe this is the time to bid. I don't know. Maybe 8% down to start the week isn't the time to bid, especially when you haven't even repriced the assets in Evergrande. A lot of things that are going on there. I would be very cautious with China. I still think that there's a massive dump still ahead for them. The question is, are they going to have to cut rates, and that drives other central bankers to cut rates too? Because they cut rates, that might be the only thing that kind of saves them. Quick crash, and then maybe they can rebound from it, but it's going to take some time, I think.
Could be a very, very big domino to fall. Okay. We have a week ahead that includes earnings, not much from an economic data standpoint, but we will be hearing from a lot of the Fed officials. We've seen the market pull back today in large part due to what Jerome Powell said. I guess all it took was a 60 minutes interview to finally get people to realize that maybe we're not getting 6 rate hikes this year. CME futures now show an 85% chance of skipping and keeping the rates the same at the March meeting. And for May, it is now at about a 37% chance, up from 27% yesterday. So we're seeing that there's this renewed belief that, okay, maybe the Fed isn't playing around here. So Fed officials, I expect to be just echoing what Powell said. I don't think that they're going to step out of line there. We do have earnings. We're in the midst of earnings season. We got the chart pulled up right here. McDonald's, I'm just kind of looking at some of the bigger ones. I'm seeing McDonald's, Ford, Wynn Resorts. Let's see how the gambling is looking right now. You know that I'm going to be a fan of that one. What else are you looking at this week from a, earnings, data reporting, Fed speak? Like, what is going to be, what do you think is going to be moving the markets?
Well, I think a lot of the big companies here are not tech. So that's really interesting. And that's going to show you the strength of the economy. It probably is going to impact more so the Dow and the Russell. That's why we're seeing the Dow and the Russell probably bleed a little bit more compared to the S&P and the NASDAQ today. I think that's really important. We saw that McDonald's actually had pretty decent earnings, and they were down 3%, a little bit over 3% today. So there's definitely some things that are going on outside of the tech sector that's going to be really important to watch this week. I think Toyota is going to be one that's going to be important to watch too. Chipotle, man, I don't care what anyone says, might be a bigger bubble than the Magnificent Seven. they are also raising prices in California once again. And I'm talking about the food, and it's to make sure that they can pay their employees who have also gotten a raise recently. So everything is just being thrown onto the consumer. I want to see what happens with Chipotle. I think that's a bubble that needs to burst 100%. I'm looking at over here. Mattel is going to be interesting. See how the holiday season went for them. I think it was them or Hasbro. Someone said that it wasn't going to be a good season, and that's kind of interesting. Thinking that we're going into the holiday season, toys should be doing well. If they didn't, well, then that's probably means that we're not going to see toys do that well for the rest of the year until one of the big holidays comes up again, which is probably Christmas.
We got Hershey, so toys and chocolate, man. It's, the Chipotle ones on Tuesday, that's going to be.
Fuck Chipotle, dude.
Dude.
I hate them now.
That, they've been hyping that carne asada. That carne asada is ass. Okay, I make better carne asada than that. So get out of here with that nonsense. But yeah, I believe very firmly that we're going to continue to see companies that rely on discretionary spending take a bit of a hit here. And Chipotle has gotten so crazy expensive that, imagine trying to taking a family of four at Chipotle. It's like 60, 70, $80 now. That's not going to be lasting a whole lot longer.
No, not at all. And I mean, just looking at this here too, Snap Inc., which that is Snapchat, right? I'm not mistaken.
I believe so.
Yeah, well, they're laying off 10% of their workforce. Announced this morning.
Had good earnings. Do people still? I'm old. Okay, I'm pushing 40. Do people still use Snapchat? Is that still a thing? Are the youth still doing that?
10 years ago, I used it. I have the same snap score that I did back in 2014, just so everyone knows how many snaps you send back and forth to friends. But let's put it this way. It's been about a decade since I gave a shit about fucking Snapchat. But they're laying off 10% of their workforce, which is really interesting too, because I think that the Reddit IPO that's coming up is going to be no different than what Snapchat ends up seeing, right? It's so dumb. We're at the near that's all-time highs we're all-time highs for a lot of these indexes. And it's like, let's IPO for something that means nothing to the global economy. Reddit. I don't know. I think that and Snapchat are just so stupid. Looking out across here, I don't see anything other than that that's too crazy. I mean, obviously, PayPal PayPal's reporting earnings again? Did they report earnings already? No, they made an announcement. That was what it was.
They report earnings once a week or something.
Idiots. Yeah, but looking across here, ConocoPhillips, maybe. Speaking of which, I wanted to take a look at oil because I think for the most part, we'll see how this plays out for the rest of the week. Let's take a look at oil because a lot of people over the weekend were saying that oil is going to shoot up because of what's going on in the Middle East, right? And again, I'm no expert in any of that stuff. However, I am an expert when it comes to bullshit. And I could see that the demand for oil is dropping significantly. And we could see it in the price 100%. I think a lot of the things that are going on over there are benefiting people who have skin in the game when it comes to oil. Let's see do I have it here? Yeah, I'll just pull this up and we'll go to oil. This is the monthly for oil. There's a lot of fucking waves and lines and stuff that I have on there I got to clear up. But if we look at this, it's a little bit more clean. And this is stuff that I charted out before anything happened in oil. Like this is 100% just pure structure, 53535 ends with 5. And that 5 should take us to the bear market bottom. But, this is wave 1, this is wave 2. I think we're getting up for a wave 3, which is probably going to take us pretty deep. Obviously, there's waves within it, so it's going to take some time. But for the past few days in oil, for everything that's going on over there, we could see that we are down roughly, let's go from the heights to where the bottom was. We were down at 9.8%. We're up a little bit today, it bounced. But I think that we are going to be getting into the 60 handles fairly soon if nothing does changes. Maybe we get a bit of a bounce here. Maybe I have to pull this up and we get something like that. But I do think that our next move, our wave 3 of this 5-wave move, which would be our third wave in this whole structure, would probably take us into the 60s, maybe even to the high 50s, right? And what does that tell us? Well, it tells us a few things. That the government is probably going to spin this as like, we're bringing oil prices down. It's going to be cheaper for people at the gas pump. Sure, maybe that works in the election. I think we're a little bit too far out to be seeing that, though. The other thing is that the global economy's demand for oil is just dropping significantly. Why? Because unemployment is rising. I was looking at that jobs data report again from that makes no sense whatsoever, and I'm not the only one that says that makes no sense. They added all those jobs. However, they're telling people you're getting a raise, but you're also working less hours. There's so many things that are conflicting there with other data sources, but I do want to take a look at some other things in the past, usually when we start to see unemployment rise or when we've seen some, turbulent times within, the economy. I think there was a lot of fear back in 2014, summer 2014. You could see that oil dropped from 107 all the way down to about $44 a barrel, even dropped even lower in 2016 to around $26. This is US oil, their chart. But we can see that in the span of, let's see, where is this? June of 2014 to, let's say, right here, January of 2015. So what is that, 6 months or so? We dropped 40% in oil. And that was in a time that wasn't necessarily a recession, right? If we look at the great financial crisis, here we are right here. When demand does drop significantly, it drops fucking significantly to the point where it's like, well, maybe something is wrong in the global economy. It dropped 77% in the matter of, let's say, what is that, July 2008 to November 2008. Not that long of a period of time, roughly, what, 4 months, dropped that much. So we can see that oil does move when demand dies out. I think demand is really slowing down here. The question is, how long can they keep it at this level where it benefits them? Because I do think that global economy's demand for oil is just dwindling. And again, that comes with manufacturing dropping. That comes with any type of people who just don't have the money to travel. I mean, obviously this would be affecting the airlines too. So I'd be interested in seeing some of those airline. I think Spirit's one of them that's reporting earnings this week too. So it'd be really interesting to see how this might be affecting them. But I think Q2, Q3, Q4 this year, if oil does drop significantly, you're going to see a massive crash in the stock market. I'm not saying just because of oil, but just because how much the economy does rely on oil. And if the demand's not there, it's probably a good sign that we're going to see a lot of pain at some point in the equity market, maybe even bleeds into 2025. Who knows? But that's just something that we have to keep an eye on. I think we're going to be in the 60s fairly soon for oil.
Okay. Oil. I mean, it's been a weird time, man. It was like a year ago, we were ready to become oil barons, just been all over the place. And it's just this, I don't know. My head's all over when it comes to the markets right now. Cause I'm trying to figure out, like, in what world can this keep going? It doesn't make a damn bit of sense. And people are spinning this narrative that, with Apple, the Vision Pro is going to save Apple and that's going to save the markets, and Jim Cramer and all the videos people in public with their Apple Pros, which is just the absolute worst thing in the world. But
Thank you.
we can talk Apple for a second before we start
Yeah,
to wrap this up.
absolutely. I also want to talk about Steve Eisman real quick because two quick things he said that made no sense. And it's, again, people spinning things to be a way where how long can this really last? But Apple, the interesting thing with Apple, and I have this theory that Apple is putting out this Vision Pro that is the worst version of the product that will ever be released. It'll probably get better in the future. Things too fucking clunky. And I was talking with even Chris over the weekend. These glasses are annoying to wear half the time. And this weighs a few ounces. Having something like that on your face all the time, and then you have a battery pack that's running down your ear into your pocket. I don't know. It just seems like a pain in the ass. It's a cool fad right now, sure. But I think the real reason that this thing's releasing and why they're put out such a stupid product, it probably isn't even done, to be honest with you. And maybe they tweaked it up, but I think a lot of the earnings of other products that they have maybe just aren't selling that well, right? They kind of needed something to say, like, hey, look at this new toy that we got. Don't worry about, how our MacBook Pros are selling, how our iPhones are selling. Take a look at this. I think that's kind of the reason with Apple. I think the bad YouTube reviews will come out soon enough, and when they do, maybe people won't be so bullish on buying them past the pre-orders that they already got. But that's all I'll say on Apple.
The tweet you put out that had the picture of the guy who was like trading crypto using his Apple Vision Pro, and you're like, this is what hell literally looks like, had me dying, because that is in fact what I think hell looks like.
Dude, I can't even look at one screen. Like, I haven't looked at my trading account in over 2 months. Like, I have not, because I know it's not something I want to see. Imagine seeing fucking 5 windows of your just net worth just dropping all around you. That is personal hell at that point. But yeah, so I do want to talk about Steve Eisman too, Big Short guy. Man, he said some two stupid things, I thought, today. And again, I respect the guy. I used to like him a lot, but again, no false idols in this market or in this life. Sometimes you have to realize that you are on your own. Either he's playing dumb or he's just doesn't understand what's going on here. But he thinks that there are no signs of a recession coming anywhere near. And he said that the reasons why he believes that there isn't, because even some of the banks, Capital One being one of them, their CEO thinks that credit card delinquencies are going to come down at the end of the year. I don't buy that one bit. If he's believing that after he's not investing in the banks, that makes no sense. So that's very, very problematic. I don't believe that one bit. And it kind of ties in with how everyone else is kind of saying, whoa, look at the Magnificent Seven. The economy's strong. The economy's not strong. All right. China is part of our economy. I don't care what anyone says. And then you take a look at what he said after that, and he said that, you know, maybe consumer credit, that would be something that'd be really that would caution whether we're going to go into a recession or not. Right now, the consumer looks strong. You know, I don't see any problems in the consumer credit. I see a big problem with consumer credit. Personally, I think that there's, you know, the fact that we are seeing credit card delinquencies, that these credit card companies are seeing them go past 90 days, that we're starting to see the credit card debt at an all-time high. And then the other thing that happened in 60 Minutes last night too was about how people are using some of their loans from federal loans and stuff like that for gambling. You know, you see the younger generation. It's just like the consumer is not only not smart right now with their financial wealth, they're also just making huge mistakes that are just absolutely adding to the fact that we can't pay this back. And if he says that we're at a point where the consumer is still strong and they can pay off some of those credit of this debt, and they're going to bring their delinquencies down, I don't know, man. Maybe we're living on a different planet, but it sure as hell ain't Earth. Yeah, that's all I got to say on Steve Eisman. You know, again, smart guy, I think 100%, but sometimes you got to think for yourself, because it's easy for people to miss it, and anyone can miss it at any given time. And there's just so many signs that are screaming to us. I mean, why the fuck is the DXY up today while equities are still near all-time highs, right? You have to question things like that. I mean, the DXY is up it was up 0.5%. It's above 104.5 earlier this morning, almost at 104.6. Gonna be really interesting to see how that plays out, especially amid this week's earnings. But let's go to crypto and we can wrap it up. Before we touch anything in crypto, we got to look at Coinbase 118. That's where the stock is. And if we look at this here, we were talking about the 5-wave move: wave 1, wave 2, wave 3, wave 4. Wave 5 waves down, right? I thought it was going to go a little bit lower. I wanted to see us in the 100 to 90, but this is good enough for a 5-wave move. Maybe it has a little bit more, right? Maybe we do get to that, you know, we get an extension of this 5th wave and we see it later this week. Maybe Bitcoin dumps, right? It's going to be interesting to see that. But I do think that we are going to see an ABC corrective pattern, something like this. Maybe take us back up to maybe 130, 140, somewhere like that. But then again, this is just a sub wave of a bigger wave, which would probably leave us with another 5 waves down. And, you know, depending on what crypto does, because we are waiting for something on Bitcoin, which should be happening fairly soon. Maybe we're getting close to the bear market bottom sooner than we think, and we're actually putting in this massive wave to the end. So it's going to be really interesting to see how that is. But Coinbase is down 8% today. Meanwhile, Bitcoin's not, right? It's really interesting to see. The other thing is, we talked about Brian Armstrong possibly stepping down. It's weird when Coinbase sells off and Bitcoin's up, there usually is insider selling. So I'm really interested in seeing if there's any insider selling. We'll find that out next week, obviously, from reports. But I would be very interested to see if a lot of people offloaded Coinbase shares to start the market because they knew something. So again, that's just speculation. Nothing is given on that. And to end up here with Bitcoin, let's just zoom in. You can see that this chart is absolutely fucked, right? It's been so messy to track Bitcoin these past few days, right? It's up 500, down 500. It's not fun. Did you say something real quick?
So what is going on there?
I don't know. I'm trying to make sense of it. Like, look at all this. Look at all these 5s and 1s and C's and A's and B's. None of this shit makes any sense. But it looks like 5 waves. I thought we would get a pullback here before we get another 5 waves up. Maybe take us to that 45, 46, a little bit higher than I anticipated, around 44.5. We're just waiting to see. But again, the thing on the daily stochastic RSI is that we're overbought, right? I mean, we're at 88 and 90. You know, give us another day up here in the green, we're probably going to be 90, north of 90 on both of those. So it's really interesting to see. I haven't looked at the EMAs yet. We're flirting on the 50 EMA, so it makes sense that we find some support on it and bounce, especially after we broke underneath it. Let's see what the Bollinger Bands are looking like. Bollinger Bands look like they're contracting, not too much. Nothing too crazy on that front. Let's see volumes. Volumes maybe give us an answer. Volumes are diminishing as price is somewhat going up. You know, it's a bit of divergence. I'm not too sure. I'll be honest with you. It's a very, very weird chart right now for Bitcoin. I'd have to go into like maybe the hourly, the 4-hourly, which I don't necessarily want to do because even that is confusing. Everything seems like, okay, 5 waves here. Maybe this is A, B, C, and then we get another 5 waves up from here. That'd be probably the only way I could justify this wave 2, and we still have a little bit higher to go. But you know, that could easily lead into a huge pump where we're just above, you know, this high, and then we have to readjust everything that we were looking at for the past few weeks. So I think with Bitcoin right now, it's very, very much stay cautious. I think this is also very interesting what's happening over here. This could be distribution. people offloading, and maybe there's one more pump that gets people into the market, and then next thing you know, it's the big dump. But if we're waiting for the halving and everything like that, we got about 2 months or so to see if we get that 40% correction. But I'm not convinced right now that we're putting in a new high. I am convinced that we will see Bitcoin, at some point in the next 2 to 3 months, put in that 40% correction to meet up with the halving. So that's all I got on the crypto front. Nothing necessarily else to keep an eye on. Just monitor the charts. Don't get caught up in any of the mania. It just seems like a very tricky week to be trading crypto.
The big dump. That is going to be the name of my memoir. Okay. That is how we're going to wrap it up for today. Kevin will be back throughout the week with our buddy, Mr. House, to keep everyone updated. If you have not yet, give him a follow on Twitter. He's constantly putting out quality information there and the occasional shit posts that are quite funny. So follow him, KShanFT, on Twitter. I'll be back next week, off on vacation the rest of this week. Going to go enjoy some time with the family, a little bit of snowboarding. It's going to be wonderful. So, I leave. Listen, the market is going to tank tomorrow because I'm going out of town. Like, just book it. Short the QQQ now. Not financial advice, blah, blah, blah. Thanks everybody for watching. If you have not yet, like, subscribe, comment, all of that good stuff. Have a great day, everybody. Have an awesome week. I appreciate you all. Chris, thanks for being here. Kevin, thanks for for being a great co-host. I appreciate and I love doing the show with you, buddy. Have an awesome one. I'll see you guys next time.
Take care, everyone.